I'm about to tell you who truly controls Bitcoin's price movements. Here's a hint. It's not Wall Street, it's not the government, and it's definitely not the guy next door stacking a few sats. The real power lies in the hands of a secretive and powerful group, the long-term holders. You might be thinking, are long-term holders really the ones controlling Bitcoin's price? That doesn't sound right. But the data doesn't lie, and I'll show you exactly what's been happening. Long-term holders, or LTHs, have been shaping this market for years. They create supply shocks, they stabilize prices, and they fuel every major bull run. Think about it. When retail traders are losing sleep over a $5,000 price swing, long-term traders have been calmly accumulating during bear markets. They scoop up Bitcoin when no one else wants it. Hello. Then when the bull run hits, they start to unload some of their stash and take profits when the FOMO crowd piles in. These same long-term holders are also sellers, strategic sellers to be exact. When Bitcoin starts to go parabolic and prices start soaring, long-term holders don't sit on their hands. They know when it's time to take some profits. They sell just enough to capitalize on the gains while still maintaining a position of strength. Keep in mind that long-term holders have a massive impact on Bitcoin's supply and demand dynamics. When they buy during downturns, they pull Bitcoin out of circulation. They reduce the available supply, and when supply goes down, what happens? Prices stabilize or increase. So why does this matter to you? Because understanding long-term holder behavior isn't just interesting, it's a superpower. And trust me, the data I'm about to share with you will blow your freaking mind, guys. Long-term holders are defined as investors who hold onto the Bitcoin for more than 5 months. But they're not your average run-of-the-mill buy and hold folks. No, these are the disciplined veterans of the market, the ones who hodl through storms and the crashes and the chaos, which we all see. They are the backbone of Bitcoin. And here's the magic of what they do. They accumulate, and they tend to be the ones that really believe in Bitcoin, not these like short-term folks that we all know about. When the market is in turmoil, when prices are crashing, and when everyone else is panic selling, they're calmly scooping up cheap Bitcoin. They don't just chase pumps, they hunt for bargains. They act in the opposite way to the rest of the market's emotions. You all know how emotional this market can be, especially on Twitter. Then, when they do sell during the bull runs, they release Bitcoin back into circulation, providing liquidity for most people in the market. But here's the catch. Their moves are so calculated and so precise that they shape the entire market without most people even noticing. Now, if we take a look at the price history, we can see the story of Bitcoin is written by the long-term holders. Their price impact on Bitcoin's price is not a theory. It's literally backed by data. Stick around because I'm gonna break it down for you. First, let's take a look at the accumulation phases. These are the long periods where long-term holders quietly step in as the market panics. Think back to early 2024 when Bitcoin was sitting at just $30,000. The media was screaming, Bitcoin is dead, like they always do. They're full of knuckleheads in there. People were dumping their Bitcoin left and right because they were scared that Bitcoin would drop even further. But not the long-term holders. No, they were actually quite busy buying. In fact, by mid-2024, long-term holders held over 82% of the circulating supply of Bitcoin. That's pretty insane, a new all-time high. Massive accumulation like this can create supply shocks. With so much Bitcoin locked up in their wallets, there's less and less available for trading on exchanges. And what happens when supply tightens, prices stabilize and start creeping upwards? So let's move on to the distribution phases, the moments when long-term holders decide it's time to take some profit and cash in. We can look at the 2024 bull run as a prime example. When Bitcoin skyrocketed from 30,000 to 58,000 and beyond, guess what happened? Long-term holders started selling. Over the course of that run, they offloaded nearly 2 million Bitcoin as prices climbed higher and higher. To put that in perspective, that's nearly $200 billion worth of Bitcoin flooding back into the market. And here's the catch. The price didn't crash. It's because the demand was there to absorb it, guys. But it also means that these sell-offs are part of what stopped Bitcoin from running straight to $200,000. It's what stopped Bitcoin from running straight to $200,000 overnight. The long-term holders slowed the run, which actually helped the market from overheating. Now let's look a bit closer at that 2024 move for a moment. By early 2025, Bitcoin had touched $100,000 and long-term holders had reduced their holdings to levels not seen since mid-2022. That's a classic example of their cyclical behavior: buy low, sell high. They accumulated heavily at $30,000, creating a supply shock, and then distributed strategically during the bull run, ensuring liquidity without triggering a crash. But here's what's kind of funny. Most people attributed these price movements to flashy headlines about ETFs or celebrity investors. The truth is far simpler. It was the long-term holders all along. Their buying created the foundation for the rally, and their selling provided the liquidity for the rise. They're the real reason behind every major market move, as they're the ones who believe in this space long-term, not these BlackRock. So the historical data couldn't be more clear. These long-term holders are what really drives Bitcoin's market cycles. They accumulate when fear is at its peak, locking up supply and setting the stage for the next rally. Then when the euphoria and retail hype take over, they release just enough supply to keep the market healthy and prevent overextension. They've done it before and they're doing it now, and they'll do it again, guys. These guys are nonstop. So if you're not paying attention to what the long-term holders are doing, you're completely missing out on one of the biggest signals in the Bitcoin market. So let's stay focused on the recent price moves on Bitcoin, because the recent moves by long-term holders have been absolutely ginormous. And it might be a sign of what's to come. So here's what's been happening as of January 2025. Long-term holders who have once held almost 82% of Bitcoin supply, which is now over 17 million, now just hold 14 million Bitcoin, which is still a lot, but that's the lowest level we've seen since July of 2022. Why does this matter? Because it means over 3 million Bitcoin, worth over $300 billion, has been sold back into the market during the recent price surge from $58,000 to $100,000. That's a massive sell-off that didn't come out of nowhere. It's a textbook long-term holder behavior. They accumulated during bear market prices around $30,000, which is what we were doing all along and telling our members at learningcrypto.com about it too. I think we're all pretty comfortable right now. The long-term holders were loading up when no one else wanted Bitcoin, which has helped create a supply shock that built the foundation for the bull market. Now that Bitcoin is hitting six figures, long-term holders are starting to cash out, securing some of those profits. Classic long-term holder strategies. But here's the incredible part. Even with nearly 3 million Bitcoin hitting the markets, prices didn't tank. In fact, Bitcoin's price stayed resilient, bouncing around $100,000. How is that even possible? Well, it goes back to those supply and demand dynamics we spoke about. So the next time you see headlines screaming about price manipulation or institutional dominance, remember this: the real power lies with the long-term holders. They've quietly shaped Bitcoin's market for years. Now let's address the elephant in the room surrounding high-profile investors and institutions. If you've been following the Bitcoin narrative lately, you've heard names like Michael Saylor or companies like BlackRock thrown around as if they're pulling all the strings. While some of this might be true and they might have some influence, they're not the ones steering the ship. The long-term holders are. Let's start with our old pal, Michael Saylor, the ironic face of Bitcoin maximalism. MicroStrategy had made headlines time and time again for its massive Bitcoin purchases. As of right now, MicroStrategy holds around 461,000 Bitcoin, which is billions and billions of dollars. But think of this, while Saylor's purchases are impressive on paper, they're still nothing compared to the influence of long-term holders. MicroStrategy's holdings are a rounding error compared to the millions of Bitcoin controlled by long-term holders. Guys, the recent long-term holder sell-off, nearly 3 million Bitcoin during that 2024 run-up, dwarfs MicroStrategy's entire stash 5 times over. Let's not forget centralized accumulation by corporations like MicroStrategy go against everything Bitcoin stands for. Decentralization, individual sovereignty. Bitcoin isn't meant to be hoarded by CEOs trying to play financial overlords. But here's where we are. I guess it's part of global adoption. And what about the ETF hype? Sure, the approval of Bitcoin ETFs has brought in a lot more money into this space. They have accumulated over 1 million Bitcoin, which is obviously a big amount. That's nothing compared to how much long-term holders have. But don't let those headlines fool you. The ETFs are newcomers. The long-term holders are the veterans. Long-term holders have been here since the beginning. They've weathered every bear market, fueled every bull run, and quietly controlled the supply in a way that no single investor or institution ever could. So the next time you hear someone crediting Bitcoin's price movement to a corporate treasury purchase or flashy ETF launch, remember who's really in charge, guys. It's not the Wall Street billionaires or the Wall Street giants. It's you, it's the long-term holders, the real drivers behind Bitcoin's success. So what's the big takeaway here? It's simple, guys. If you're serious about understanding Bitcoin or profiting from it, you need to pay attention to what the long-term holders are doing. They're the ones creating the supply shocks, stabilizing prices, and building the foundation for every single bull market. And if you want to see what we've been doing with our Bitcoin and what we're selling and when we are selling, check out learningcrypto.com. We've been in this space for over a decade, way longer than Saylor, way longer than Musk, way longer than most people, and we really want to help you out because there's a lot of disinformation out there, and this is why people come to Learning Crypto, for a bit of truth out there. All right, talk to you guys soon.